Welcome to GEPL Capital Talks on Tuesday, a weekly podcast, bringing to you an interesting talk related to finance every week. Stay tuned. Hello and hi everyone, and welcome to our Talks on Tuesday's weekly podcast. This is our episode number 54. And today we have with us Head of Research and award-winning technical analyst, RVP Equity, Pushkaraj Kanitkar. Pushkaraj Kanitkar will be telling us the three metal stocks to buy. And before that, let me remind you to hit the bell icon and subscribe to GEPL Capital on YouTube. Hello, Pushkaraj.
Hi, Lakshmi, and thank you very much. It's quite an interesting topic to be talking on metals, which is you can call the flavor of the year. So quite an interesting topic going ahead.
Okay, my first question, while the topic is about metal stocks, the first question I have is why metals?
Well, interesting question. And like I said, metals happen to be the flavor of the year. The Nifty metals, which is the index that represents the cumulative price movement of the listed companies that are major metal producers and miners of the country, in a way is a representative of the overall stock price movement of these companies. By and far, the metal index has been best performing index both on the short term as well as the long term horizon. Say, if I look at the 1 year horizon, Nifty metals have returned around 180%, whereas on a 3-year scale, they have returned around 71%. Thus, Nifty metals is the best sectoral index 1 year return basis as well as third best on a 3 years returns basis. So certainly, I think it's an interesting sector to be into going ahead.
Okay, may look probing, but Pushkaraj, will you please elaborate a bit more on why only metals?
Well, the important point about metal or the industry as a whole is that it is cyclical in nature. The cyclical industry metaphor, therefore, substantiates the future up move. Just to give an example, when in the beginning of 2008, that is in January and February of 2008, we saw the world markets correcting, the equity indices correcting a big way. However, even in that scenario, the metal pack was doing well. In fact, I briefly remember that till almost May or June of 2008, the Nifty stocks, rather the Nifty metal stocks were making new highs. It's during the same period that actually the bellwether Nifty 50, Sensex or Nifty 100, 500 were actually lamenting at their multiple year lows. So therefore, this cyclical nature of the industry in itself is something that kind of draws us to the whole scenario or Nifty metals as a favorite place to be into for the current time being. Second important point of cycles is these are long-term cycles. So in case of metals, historically, we have seen that the cycles have lasted between 2.5 to 3 years each. Also, each subsequent cycle has seen an expanse in their longevity. The recent bottom was created in March of 2020, and hence by the time cycle analysis, we feel that the current rally can take us through or will continue till around October of 2022 or even extend till March 2023. Just to give you a brief while through, we see that the first upcycle that happened was in August of 2013 and lasted till July 2014, which was almost a year or so. Similarly, the second cycle saw us through from February 2016 down till Jan of 2018, which is approximately 2 years or so. Third important point is recently we saw a breakout from all-time high levels in case of the Nifty Metal Index. That level was somewhere around 4,200. This further adds impetus to the up move, and as we have seen the index retesting the breakout levels in a correction, we feel it is in a rational uptrend, and therefore the index has rebounded to fresh highs very recently.
Okay, since you have mentioned about cyclical, can you please throw some lights on this?
Certainly, like I mentioned, the cycles are long-term in nature, and there is a bit of a fundamental backing to these cycles as well. As you know, the metal industry is capital intensive. So there are phases when the industry kinds of expands, and simultaneously phases when it kind of matures, and at the same time there is a bit of a roadblock, or if you can call a kind of a sideways move in terms of prices that happen in these metal stocks as well as metal prices. So to begin with, a cycle which has started after a expansion, or in a way what you can call as the beginning base of a cycle, you see that there is a substantial rise in prices because of the demand that has picked up all across the globe. The reasons might be varying. I mean, sometimes it is because of the boom in the auto industry. Sometimes it is because of various other factors, like you may say at some places, like what we recently saw in case of China, that certain smelters had to close down their plants because of certain environmental issues. So, I mean, the reasons could vary at many times, but certainly this phase where after an expansion, the overall things have picked up and the prices have also moved up. That is where the cycles come into picture. And certainly, like we saw in the earlier case, these cycles last for 2.5 to 3 years. So that is certainly a good time to be into the cyclical stocks at this juncture, even at the time when many of the stocks are creating all-time highs here.
Okay, which stocks do you recommend from Nifty Metals?
Well, to understand which stocks to really be into, let us try to understand the constituent weights of the Nifty metals. The top 5 constituents of the index based on the weightages are Tata Steel, which is having a weightage of around 21%, JSW Steel, which is having a weightage of 18%, Hindalco having a weightage of 14%, Vedant around 11.5%, and Adani Enterprises around 8.5%. Now, these 5 stocks put together totally weigh close to around 3/4 of the index, that is close to around 75% of the index. The above 5 stocks also happen to be the best in the lot in terms of liquidity as well as the fundamentals to a greater extent. Hence, it would be worthwhile to go with the bellwethers. And based on the above weightage, we would like to go with the top 3 for the selection. So our picks would be Tata Steel, JSW Steel, and Hindalco in that order. The volatility in the above stocks is ably taken care by the liquidity part, as all of them happen to be future and option verified stocks, which means that these are stocks which have a good pedigree and at the same time have enough liquidity in the markets to really take care of any volatile situation, which in a way puts down the impact costs in these stocks. And certainly at the time of exit as well, it becomes that much less impact for the person who is selling his stocks.
Thank you. Thank you so much, Pushkaraj. I hope this was an informative podcast for all of you. The topic for the next week talks on Tuesday will be 3 tips on asset allocation in your 30s. Hope to see you then. And don't forget to click on the bell icon and subscribe on YouTube. You can also follow us on Instagram and Twitter, for where we will try and make investing simple for you all. Thank you.